Let's put the spotlight on the consumer durable space now. Havells, of course, reported a good performance yesterday in the fourth quarter, led by the wire and cable segment. The performance of Lloyd was also pretty good. And also, of course, you remember that story that our sister channel Awaaz had done yesterday, talking about how the import of compressor and compressor components might become a little easier because of perhaps easing BIS norms. To talk about this and more, we have with us Praveen Sahay, Vice President, Institutional Research at PL Capital. Praveen, great to have you with us. Let's actually take that first story, that latter story rather, this whole import of AC compressors, because the industry has been talking about how this is a big crisis going into the peak summer months. And now we understand that maybe some relief on the BIS norms could be on the cards. Otherwise, when we've spoken to companies like Blue Star, etc., they've been talking about robust demand. What's your sense on the space?
Yeah, thank you. Thank you for inviting. So definitely on the compressor side, the news of some relaxation in the BIS of lower than 2 tons compressor is definitely the positive for near term at least. Because we are in the past we had seen there is a compressor issue, the price, raw material prices increase. That's another challenge for the industry. That's definitely a positive. But simultaneously, as the Havells has reported their numbers yesterday, and we had seen a very good 40% of a growth in the Lloyd portfolio. However, April month has been quite a muted because of a delay in the summer. What we are hearing, what the management has also indicated about, and also the primary sales of the fourth quarter has been very strong for all the companies. That also giving some indication of some risk to the primary sale for the Q1. Having said that, April yet to get over, and the May also need to. So how the summer is going to play out the way forward, all depends on the growth on that actually. So far, it's quite a muted degrowth in the south. We had what we get to know in terms of the volume. So now it's a cautious stance on the RSE right now.
On Havells specifically, in your early April note, I think you had done a downward revision in your target price on Havells. Just take us through your sort of thesis on that particular stock, because like we've been discussing, fourth quarter is phenomenal. Wire and cables doing well. Even Lloyds, which has been their pain point for so long, even that's turned in a good performance.
Yeah, so for Havells, the quarter has been very strong, and that's two things, as you had also highlighted, that's driven their numbers. Is one, the cable, 21% of a growth, and the Lloyd, 40% of a growth. As well as there some, the margin improvement or the flat YOY we had seen because of operational efficiency and a good growth in these major two segments. So the way forward, because see, the point is whether this Lloyd portfolio to continue at a 6% of a EBIT margin or the positive EBIT margin, the way forward, it all depends on the how the summer is going to play out for them or the industry. So what my sense is the bit cautious stance on the margin profile of the Lloyd for the way forward, I believe. And second thing on the cable business, because the cable 21% of a growth, they had already management highlighted that's around, this growth is a 50-50 value and the volume mix. And in the past quarter, we had already seen that the copper aluminum prices were quite firm, which led to the realization improvement. Even after a 21% of a growth, we had seen contribution margin of the cable has contracted for a YOY and sequentially is because of a product mix. So there also there is a cautious stance on the margin profile for the cable business for them as well. So that's why, and right now the valuation is also not quite lucrative for them. Currently trading at a 59 times 26 and 49 times 27. So definitely we have a cautious view on the Havells.
Okay, all right. Hi, Praveen. Good morning. Good to see you and Nigel on this side. I think another point is the switch gears business, which is their margin accretive business. Out there, growth was only around 6%. So I guess that explains why the stock actually is opening up with a mild negative tick. It's had a good run in the past few trading sessions. And also sustainability of these sort of numbers is something that the street is questioning. But Praveen, you have a preference for other names, right? Stocks like KEI as well as Polycab, they got hit hard when we had the news that other big conglomerates are eyeing the wires and cable space. you believe that they are providing good buying opportunities?
See, that's, especially for the cable companies, KEI or a Polycab, their valuation has a derated, and that's the major reason is the two major conglomerate is entering here. And if I look at KEI, which has still maintaining their guidance over 20% of growth in the top line with a slight improvement in the margin, currently trading at around 26, 27 times FY27 earnings. Definitely, it's looking better placed in the risk reward scenario at this juncture right now, when the stocks has from the last few days done very well in the consumer durable space. A run up, from the bottom, it's around 17-18% already run up. The peer set, whether it's a RAC player or even the diversified players. So KEI is looking still quite lucrative, looking at the return risk reward scenario.
By the way, Praveen, just a shot in the dark, really, good morning. Do you have any thoughts on this entire solar space? The US has imposed high tariffs on Chinese-owned solar cell makers out of Southeast Asia. Overnight.
Definitely, that's an opportunity for us, but we don't have any coverage right now on the solar side of the businesses. But definitely, Havells also has invested in the solar business, looking at an opportunity, or the names like Avari or a Premium, which has a higher exposure to the US, definitely is going to get the benefit. But we don't have any coverage on that and the firm view right now.
Okay, massive moves last night. I was just looking at some of these moves, but these are all, US solar companies. Praveen, thank you very much for joining us. First Solar, 10%. The company called Sonova Energy, 27%. Solar Edge, 8%. So these are, tariffs moving markets and sectors in a very large way. We'll, of course, try and have one of these companies join us. Maybe both of them join us for a discussion on what this means. How much do we actually export? My sense is there's enough demand here locally for this to be all of the capacity which is coming up to be sold into the Indian market. Exports into the US, we'll have to sort of ask both of them, and we'll try and do it as the day goes by.